to be here.
So whatever the niceties of saying that in that room, is he right? That in fact we've let this go way too long and it's high time we really tried to get China to comply with some basic rules on trade?
Well, I give the president strong marks for causing China to come to the negotiating table. He did it by unorthodox means. He's not a graduate of the Georgetown School of Diplomacy. I think we've all worked that out. But he certainly got China's attention with the imposition of tariffs. I think tariffs are lousy economic policy, but reasonable political policy if you're trying to grab the other side's attention. He's done that. And after the Chinese initially did not take him seriously in the earlier parts of 2018, they certainly worked out as the year progressed that he was serious, and then you've had the negotiations unfold. Of course, the devil lies in the detail of this agreement. There will be an agreement. It's in both sides' interests. But where we get to on the hard questions within it on intellectual property, technology transfer and enforcement is still an open question for us all.
Well, and the enforcement maybe drives the rest of it. At least the reports we're hearing right now is the Chinese, in principle, saying, yes, we'll buy more things from you. We'll do something on intellectual property transfer. They also already have changed their laws in some regards. We'll do something on some of the other issues. But Mr. Lighthizer reportedly saying, yeah, but we need to make sure it gets enforced. Are the Chinese going to be willing to put up with the sort of enforcement mechanism that Mr. Lighthizer would be likely to ask for?
No. But he might get half a glass, but not the full glass he wants. So, for example, the American negotiating position is just to keep you Chinese guys honest, we want to keep a range of our tariffs in place once the agreement is signed. And secondly, if you're subsequently very bad, very naughty, then we're going to impose bigger tariffs, but we want you to agree in advance that if we do that, you won't impose retaliatory tariffs on us. Well, we have an expression in Australia, pigs might fly. That ain't going to fly. The Chinese will see that latter provision in particular as almost a revisiting of China's unequal treaties with the West in the 19th and 20th centuries, whereby there was one rule for foreigners and a different rule for the Chinese. But they will have to agree to an enforcement mechanism. So I notice Bob Lighthizer and others, who I think is doing a really solid job for the administration, is now talking about weekly exchanges with officials, monthly exchanges with officials, data transparency, as well as what then happens on the specificity of what to do if a violation is found.
And what you suggest there may be a message to the business community of financial markets. We tend to think we'll get a deal done, then we put that to one side and move on to something else. What you just described is an ongoing process. Mr. Lighthizer's job in some senses will never be done. There'll have to be another Bob Lighthizer a week, a month, a year, 10 years from now. And should we really be preparing ourselves for an ongoing set of negotiations, as it were, with the Chinese?
Well, someone actually had a good phrase the other day on this. I can't remember who it was, but they said that, look, at present we've got an unregulated trade war going on with China. We're about to have a regulated one, or an institutionalized one. And so I think that's an interesting way of putting it. You see, American trade negotiators are familiar with ancient Chinese statecraft and statecraft, which is, there's an expression in Chinese, it says, 上有政策,下有对策. Above we have policies, and below we have counter policies. In other words, you guys can agree to what you like, and we'll do some swift work down below to make sure it doesn't quite have the full effect. Now, the Americans have worked out that China has done this in the past. So that's why I think Lighthizer and the rest of the crew are trying to make this as watertight as possible. But it's going to be a lot of pushing and shoving, disagreement on data, and then disagreement on measures. But it's better there's a joint mechanism for doing that, rather than, let's call it, a whole of system explosion in the bilateral relationship if it just goes off the rails at a point in the future.
What's a realistic set of expectations for an American or a Western businessman or for financial institutions at this point in terms of, for example, access to Chinese markets? I mean, they've been sort of opening it up slowly but surely. As a practical matter, coming out of this negotiation, could somebody like a MasterCard, a Visa, a JP Morgan expect there be a substantial change, a really jump shift, as it were, in their access into the Chinese market?
For American exporters in the goods market, this should be reasonably good news because you provide a good and you get paid, and it's usually through a line of credit or a letter of credit, and it's done. If you are selling services into the Chinese market, it's a slightly different kettle of fish because the Chinese can, as it were, rewrite the rules. So take, for example, the sale of Visa card services in the United States, in China. And what has been a sticking point now for 2 or 3 years with Visa and the rest of the MasterCard and others is the effectiveness with which the Chinese would give effect to already a World Trade Organization determination that China has unfair domestic treatment of foreign credit cards. So I think you've got to still therefore have some skepticism of how far this will go. But I think on the credit cards question in particular, financial services more generally, what I detect is this: the Chinese, for their own reasons now, need to open up the financial services market. And there's a reason for it, and that is China by 2020 will start to experience systemic current account deficits. Their need, therefore, for the importation of foreign capital will become larger. Therefore, what we are seeing is a series of measures to open the Chinese financial services market more than in the past.
We have focused quite a bit on trade and economic relations with China, but it's not the only set of relations we have with them. There are continuing developments in the South China Sea. We have a sale now of F-16s to Taiwan, which seems to have gotten Beijing's attention, I think it's fair to say. How is the United States managing that situation from your point of view?
I think it's fair to say that the overwhelming focus in Beijing at present is on putting this trade war to bed, or institutionalizing it, as we discussed before. And there's a reason for that. The Chinese Communist Party's legitimacy depends on sustained levels of economic growth, full employment and rising living standards. So you don't want to screw those things up if you happen to be running the Chinese economy or the Chinese political system. Therefore, their number 1, 2 and 3 priority right now is fixing this thing. They've had weak growth during 2018. They've re-stimulated the economy in late 18, early 19. Growth is starting to come back, but it still needs this trade war fixed in order for that to be, as it were, I won't say done and dusted, but for the regime to have confidence that it's going to have reasonable growth in 2019 leading into 2020. On the rest of the relationship, it'll be on the back burner, very much so, Taiwan and the rest, until the trade deal's done. Then we're likely to see the resurfacing of, let's call it, traditional and non-traditional foreign and security policy tensions between the two countries.
Finally, and briefly, what does this mean for the rest of the world and its relations, trade relations with the United States? I mean, after we get past it, let's assume we get past this immediate issue with China. What does it do for Australia? What does it do for Western Europe? Our situation with them better or worse, the United States?
Well, the United States under the Trump administration has developed a reputation for being non-free traders, which is a bit of a shock to the rest of the global system because most of us have been educated by American trade negotiators over the years that this is the only way to go. And certainly, you know, in Australia, we're basically free traders. I think the thing that worries us most in bilaterals is this. If you have a mandatory state purchasing list agreed to in this China-U.S. thing, which mandates, for example, the Chinese purchase of American LNG, then what about Australian LNG? And what about third countries? Are we going to be, as it were, excluded by political mechanisms as opposed to free trade mechanisms from the Chinese market? And that's from one of your allies.